Hi everybody, Will here from WB Trading, and thanks again for joining me here on the new YouTube channel. Please bear with me today. I've got a bit of a sore throat, a bit of a cough, so if I do sound a bit croaky, just hopefully you can bear with me. So I'm here today to share my strategy for day trading stocks. I day trade US equities using this strategy whenever I can fill the criteria that I'm about to share with you. And hopefully you can join me in doing so. So firstly, I just want to cover a question that I'm sure quite a few of you are thinking or asking. Why am I sharing a profitable strategy for free? Well, I mean, to begin with, I'm a profitable trader, and if we've either spoken already or you've read anything about me online, you'll know that one of my absolute passions in life is helping other people. Now, I mean, making money as a trader definitely makes me happy, it allows me to live, but money, well, it certainly doesn't provide fulfillment and it doesn't provide a sense of contribution. And since I learned that, and I learned what does provide both of those things, that being helping others, I've made it a priority to do so as much as possible, basically. Which brings us to where we are today. So let's move forward and into exactly what my strategy is for day trading the US equities markets. So how and why the strategy works? Well, firstly, what we're looking for is a US stock that's being actively traded by others on the day, most commonly because of a news catalyst, which then creates heightened volume, which, as we'll see later, acts as our entry trigger, along with, of course, providing liquidity. So when we find a market that fits this criteria and can therefore be sure many other traders are actively trading the market, what we'll try and do is ride this momentum by using price action to give us a high probability entry point. So the rules. Well, as you all know, I trade mechanically, so I don't use discretion whatsoever. All my strategies are completely rule-based, whether that's my pound-dollar strategy, my DAX strategy, or this day trading strategy that I use for stocks. So firstly, we need to identify equities with heightened relative volume, aka RVOL, a market capitalization of $2 billion upwards, and an average trading volume of ideally $1 million upwards. All of which, while we're still trading within the pre-market, aka in the lead up to the US Open, using Finviz.com. Now, what is Finviz? Well, it's a free website that allows us to use a screener to set certain market criteria, thus finding a market or markets that fit our set criteria. So let's look at an example. Here we are on Finviz.com, and as you can see, we have a screener where we can change certain market parameters. What we're looking to adjust here is just three things: the market cap, average volume, and the relative volume. And as you can see, I've filled these criteria out here with exactly what I've just shared with you in terms of the rules. So a market cap of 2 billion upwards, an average volume of 1 million upwards, and a relative volume of anything above 3 tends to work best. In certain circumstances, if you can find markets with a relative volume above 5, then you'll usually see a little bit more activity and there'll be more of a wave to ride, so to speak, but 3 or above is absolutely fine. So when we filled out our criteria via Finviz, as I've just showed you, we're given a selection of markets that fit the criteria. From this list, we'll then start to look closer at the markets we're presented with, which brings us to the next criteria. Our chosen market must be breaking out on a higher time frame, i.e. the daily chart, weekly chart, monthly chart. And the reason for this is that it attracts other traders and adds to momentum on the day. So let's look at an example of all of the above criteria being met in a trade that I took recently. So after filling my search criteria via Finviz and being given a selection of potential markets to assess, I clicked on IGC, which is the India Globalisation Capital Inc. company, and we see the below, where we note a higher time frame breakout on the daily chart. Now, this for us is our first box ticked. We filled out our criteria, we've been given a selection of markets, we found a market here that's breaking out on a higher time frame. All looks brilliant so far, so this is definitely a market that we're interested in on the day. So what do we do next? Well, we come down to a smaller time frame. I typically use the 1 minute chart to then begin monitoring for a consolidation that would hopefully lead to a potential entry for us. Now, what we see next is a strong opening drive upwards, as is often the case on high relative volume, followed by consolidation forming within the high and the low. And most importantly, we notice that we hold above the open. Now, this is crucial because we're not just gaining momentum and then having people fade this momentum and having a kind of game over situation on our hands. We're holding above the open, which is a huge indication of strength. So as price moves forward, it remains above the open. Again, this is key, and proceeds to form a consolidation. So the next step, all we have to do now is draw a trend line, or at least attempt to draw trend lines that will then give the scope to await a break outside of this consolidation area on increased volume, i.e. alongside other market participants. So there we go, we draw a trend line. We could also have drawn one upwards of the bottom of the consolidation as well, so that we'd be looking at slightly more of a wedge. But in this situation where we're looking primarily long, obviously we're hoping to see a breakout of the consolidation towards the upside so that we can get long. So with a little patience, just over an hour into the US session after the market is opened, we finally get a break out of the consolidation alongside increased volume, meaning other market participants are also joining the move upwards, creating momentum. So all that's left to do for us now is execute on the break above this consolidation on the increased volume and join the move. Now, the great thing about this strategy is the ease of which we can manage our risk by simply placing a stop below the consolidation. And if you're a bit unsure about stop placement, I've drawn a red line that indicates where my stop was on this trade. So as you can see, in the lead up to the break, we get a bit of a slowdown in volume as other traders are waiting for that break, or at least that's our read of the market in this circumstance. And then we see a huge increase in volume. And as far as managing our risk goes, we know that if price comes back down below the point where you see the red line here, we're obviously wrong on this trade, and therefore we want to exit to get out. So from there, when we've entered this position, all that's left to do is to trail a stop behind the lows. Again, a very simple approach. And just to aid any newer traders who might be slightly unsure about what I mean by that, I've drawn subsequent red lines that indicate where I trailed my stop during this trade, before being taken out at a profit upwards of the 720 mark. So the IGC trade that I've just walked you through was a prime example really of this strategy working at its best, and this strategy will provide similar trades on a surprisingly regular basis. But of course, things don't always go so smoothly. You will be stopped out at times, but always practice patience, as we often do see a false break followed by a retest of the trend line before price then moves in our direction. So if you are stopped out, don't be scared to take a re-entry. As ever, the three most important aspects of any strategy, any approach, are risk management, practicing patience, following the rules. And with this strategy, if you stick to those guidelines, you will profit. I'd also just like to add that you can go back and look at my live tweets from the day I took this IGC trade. I tweeted as I executed, in fact just before I executed, halfway through the trade, and also as I closed the position, and you can go back and see all of those tweets. And all of the tweets are time-stamped, proving that the trade I've just walked you through is not hindsight analysis. This isn't a made-up trade, this isn't Photoshop. This is a physical trade I literally took using these exact rules, this exact strategy, and I've just talked you through the entire process. I also just want to stress that even after a successful trade, I'm constantly striving to improve at either my own actions, my execution, my processes. At the end of every week, I print screenshots of all of my trades, glue these into my physical trade journal, annotate these, make notes on things such as what could I have done better, how could I have made more money on my winning trades, can I refine any of my processes, and if so, how, etc, etc. And if you follow me on Twitter, you'll know this already, but I take self-analysis incredibly seriously. My physical trade journal is just one of the techniques I use to record my results. in an effort to constantly improve as a trader, along with keeping things like performance records, statistics, spreadsheets, and so on. And if you don't do this yourself already, I really would urge you to at least consider it, because doing something as simple as physically annotating a chart, seeing and looking back at, what could I have done better? Could I have nailed a better entry? So on and so forth. Small incremental changes to become slightly better as a trader, every week, every other week, every month. These small changes add up to becoming a much, much better trader over time. So this is a quick picture that I took of my physical trade journal. These were the couple of screenshots that I printed from the IGC trade. And as you can see, I've just drawn on these and expanded on, how was my entry, how was my exit, could I have added to the trade, could I have scaled out, so on and so forth, just to zero in on the fine details of the trade itself. So that's it. You've just learned how I day trade stocks. A fairly simple approach, but it works extremely well, and it's statistically proven to provide an edge. Now, if you have any questions or need any help with any of the above, I'm, as usual, here and more than happy to help. Again, I really do take fulfillment in helping and contributing to other people's growth and seeing other traders achieve profitability, and hopefully this strategy will allow one or two of you, if not all of you, to do just that, enabling you to profit from the US equities markets. As ever, you can reach me via Twitter or email anytime. I'm always here if needed. If you don't follow me on Twitter, I'm over there at WBTrading_, and I'll put my email in the description below this video for you as well if you do want to reach out via email. So thanks again for tuning into the video. I hope that this has helped. I hope that this has added value. Hopefully you can adopt this approach and trade it alongside myself going forward. I mean, it's a Friday today, so on Monday morning during the US pre-market, I'll be following these rules myself and looking to take US equities trades using this strategy. And, we're both now following the same rules, so we should be taking relatively similar, if not the exact same trades, really. Because you are only typically presented with, say, 5, 10, 15 different markets, and you'll usually only find one or two that do tick all of the boxes, and you'll usually find at least one of those will allow you to profit on the day. As ever, we will have losing trades, but again, follow the rules, stay consistent, and you will profit using this strategy. So thanks again for watching the video. Again, I hope you've enjoyed it. I hope it's all made sense. Feel free to use the comments section if you have any comments to make. I'll make sure that I get those replied to. And I'll look forward to having you back here on the YouTube channel soon.